Good morning, everyone. I'm Jane Clark, President of the Michigan West Coast Chamber of Commerce, and so happy to welcome you today. It's Friday, January 8, 2021. So we made it through 2020, and we're here in our new calendar year for the Chamber. This is our public policy meeting this month, and we have a great presentation today. We're going to get up to speed on everything that's happening in Lansing and in Washington, D.C., and some of the amazing programs that are available now to our businesses. Now, our normal MC today, Dave Nitre, actually lost his voice this week. He's not feeling well, so our Vice Chair, Josh DeVries of Lake Michigan Credit Union, is going to facilitate today's program. So I'm going to turn the stage over to Josh. Josh, thanks for being with us today.
Absolutely. Thanks so much, Jane. Thank you, everybody, for joining us today. Glad to see all these people popping on for today's meeting. Want to give a special thank you to our advocacy and action sponsor, Blue Cross and Blue Shield, and actually going to turn it over to Joe Hune just to give us a little bit about Blue Cross and Blue Shield. Joe?
Great. Thank you so much for the invitation to be here. Again, I'm Joe Hune from Blue Cross Blue Shield of Michigan, and I would certainly be remiss if I didn't virtually introduce Sandy Ham. I think she's on the line from our Holland office. Sandy does a fabulous job for us in the Holland area. Blue Cross certainly couldn't do what we do every day without great partnerships like the Chamber, our healthcare providers, our agents, and of course, since Brian Calley's on the phone, SBAM, of course, our customers, and certainly so many others. And as a side note, I spent 10 years in Lansing serving with Brian, so I'm looking forward to what he's going to have to say today. But when it comes to the coronavirus, which we are all dealing with, Blue Cross certainly stepped up to the plate by providing hundreds and hundreds of thousands of COVID tests, as well as COVID treatment, and now even COVID vaccinations to our members at no cost to them. We provided about $120 million in premium rate relief this past year, and we're working on that for the years to come. And you can certainly check out bcbsm.com or mibluesperspectives.com. I know everybody's been inundated with information regarding the coronavirus, but you can check out those websites for all our up-to-date information. But you may notice that Blue Cross has gone through some transformations this year, along with so many other businesses in this current environment. But remember, we're still available to provide the highest quality, value-driven healthcare available. So we know 2020's been an extremely challenging year for so many of us. And as a recovering politician myself at the start of 2021, it looks a little bit rough this year so far. But I'm asking everybody, and we're asking everybody, to just please be diligent and let's do our best to stay safe and healthy this year. So thank you so much.
Thanks so much, Joe. Next, we're going to just go ahead and dive right in and get things started. I'm going to have Adam Zuverink go ahead and introduce us to Brian, as he and Brian have had a really good relationship. And so, Adam?
Yeah, thanks, Josh. When I found out Brian was going to be our speaker today, I asked if I could do the intro, not to read a scripted bio, but to give an actual personal testimonial for what Brian's meant to me the last year. I first met him 10 years ago when he was running for lieutenant governor. My respect for him has nothing but grown each year since then, which is really hard to do in the political world, right? To actually gain respect for somebody. But about 5 years ago, I became a member of the Small Business Association of Michigan's Leadership Council, which is a group of 200 small business owners from all over Michigan that gets together a few times a year to just talk about small business issues for Michigan business owners. And we were so thrilled 2 years ago when Brian decided that his life after being lieutenant governor would be as the president of SBAM. And I'm a big believer that sometimes you get the right person at the right time. And when COVID hit last March, Brian Calley was absolutely the right person to be running SBAM. For those of you who have seen them on Facebook Live, Brian and Rob Fowler, also from SBAM, just every single day did a 30-minute presentation, just giving an update with what was going on a daily basis. And for me and my clients, I represent a lot of small business owners. It was absolutely appointment viewing to just get an update from the ground in Lansing, what was going on. And I have hit Brian with so many emails over the last year, and I'm convinced that he works on a 36-hour day while the rest of us work on 24 hours, because I don't know how he responds to everything so quickly. The other thing that quickly cracks me up every time in one of these videos when Brian says, "I'm not a lawyer," but then with the next breath, he will go ahead and explain the law better than 99.9% of lawyers in Michigan ever could. So without further ado, I want to introduce the former Lieutenant Governor of the great state of Michigan and current president of SBAM, Brian Calley.
Well, thanks, Adam. I'm blushing. That's very, very generous, and it has been quite a transition from office to SBAM. It felt like home straight away. It just immediately was the people that work there. We've got a team of 27 people, and it's just really a family. It's an amazing organization. Over 28,000 members around the state, and actually, if you want to go ahead and you can take the slide down for now, because I want to touch on a few things that aren't in the slides to start with, and then we'll get to the policy update. So in the slides, we're going to, just to give you a preview, we're going to talk about some state policy issues that are really important to us right now, some things that have happened, changed, moved, where we're going to place our advocacy in the future, but we'll spend most of the time on the changes in the stimulus relief package that came out of DC late last month, and what that means for business. And there are some really important things in there, some things that I think will be relevant to a wide array of businesses. So at SBAM though, this has actually been a growth period for us, and I don't necessarily mean growth in membership, although we have grown, but I just mean every single member of the staff has really focused in on and adjusted to whatever needs to be done, and taken an attitude of whatever it takes to do as much as we can for our members. In the beginning, as Adam had mentioned, it meant curating, changing information. So we do small business briefings on Facebook Live twice a week now. We used to do them daily, and that was because things were changing daily. Remember, all the way back in the spring, and trying to interpret things and where things are going, and what are the new things you need to know, how to interpret things. That's the role that we had played early on. Now advocacy has stepped into a much larger role. So a few things I wanted to cover before we get into those slides. I've got a few updates in terms of the overall trends, health updates for the state. We follow these at SBAM very, very closely, because whether it's the recovery of the economy or the threat or possibility of closures and reopenings, it's all tied to how the numbers are moving. And we saw quite a spike leading up to Thanksgiving time in our state. So fall started, school started, there was a lot of fatigue at the time. People started going indoors, and there was kind of a trend. The colder states saw rising infection levels. The counties that have colleges and universities saw higher rises, but eventually virtually everywhere. And it culminated to Michigan seeing a second wave in pretty close tandem with the Midwest and the northern states in the mountain region. And so since then, though, the numbers have come down quite substantially. And we will hear from the governor later on today. I don't know if we're going to, in the press conference at 1:30, if the governor is going to announce what will happen after January 14th, when the current emergency order expires. I was very confident that the restrictions, particularly on indoor dining and concessions in places like movie theaters and bowling alleys, would be backed off a bit. Although since Christmas, we have seen a small uptick in the numbers. So in the numbers of infections. So we saw it come down quite a bit, and now looks good compared to Thanksgiving, looks really good compared to Thanksgiving, but still pretty high, and a slight upward trend since Christmas. So I'll be anxiously awaiting what happens when we hear from the governor on at 1:30 and whether or not there is an announcement of what comes next, or maybe just a few clues of what happens when the current emergency order from the Department of Health and Human Services expires on the 14th of January. So stay tuned on that part of it. In terms of hospitalization, we are now at overall about 57% of the springtime peak. So we think of that as kind of a benchmark. Remember, in the springtime, there's a lot of stress on hospitals in that first surge. We actually reached pretty close to that springtime peak this time, although it was spread more across the state as opposed to concentrated in Southeast Michigan. And the spring was concentrated in Southeast Michigan. But we've seen that come down quite a bit. So it's about 92% of the springtime peak. Now it's about 57% of the springtime peak. We also see the overall hospital capacity in every region except for Saginaw has fallen below the red zone. So we would consider the red zone being about 85% of total hospital capacity, different than ICU. So total hospital capacity, not taken up by COVID patients, but just in terms of overall capacity of hospitals. When it gets above 85%, we start to get really nervous in terms of capacity. There were several regions in our state that were including West Michigan, that were in that range. It's fallen back down now since Thanksgiving to a point where the only one over 85% at this point is Saginaw. And then in terms of ICU capacity, we've seen ICU inpatients for COVID come down quite a bit as well. So they hit a peak statewide of 874 COVID patients in intensive care units, so the most serious status within a hospital, and that's down to 523 as of the last report. So that's come down quite a bit. The red zone for COVID percentage of ICU COVID patients is a third, or 35%, and there are no more regions that have more than a third of their ICU beds taken up by COVID patients. So I say all that to say to represent that while the numbers are still high, they've been trending, save for this little, hopefully what ends up being a little blip around Christmas, that the numbers are trending in the right direction. And then we see the overall fatality rate, the deaths associated with COVID, they had hit the 7-day average, hit a peak in the fall of 132. It's down to 78 now. So still serious, still something that is very concerning, but again, trending in the right direction. But there is a new threat on the horizon. So at the same time, when we have the vaccine being distributed, and thankfully the vaccine appears to be effective against all of the variants of this virus that exist, but there is a new, relatively new variant that is very prominent in the United Kingdom and also in South Africa. And there are about 60 cases in the United States of this variant that have been identified, not in Michigan yet, but this variant is much more contagious. It's believed to be about 1.5 times more contagious. And that means that the speed and efficacy of the vaccine distribution is that much more important. And thankfully, this last week we saw the state and the governor announced that at least the rules in the order are being simplified for who gets what vaccine. You can waste a lot of time and it will be a lot slower if you move forward on if you try to pre-script and order it. Looking for the perfect order of vaccine distribution is way too costly for society. The countries that have done better on this are the ones that had very simple orders. The gold standard right now being Israel, which is already at 17% of their population vaccinated, and across the country and in our state, it's between 1% and 2%. So This simplification, I think, will make a difference. There's a ton of logistical work that still has to happen, but our state is sitting on about 500,000 doses right now that are between CVS, Walgreens that are doing the nursing homes, hospitals, and public health. And but public health has the fewest of those by a lot. So there's a lot of logistical work to be done. So the first step, I think, towards solving that is simplification of the process. We have seen some steps toward that this week, and so that's a good thing. I'm more hopeful, frankly, pretty frustrated with that early, the way that the rollout happened in the first month here. So let's go ahead and go to the slides, because I really want to cover some things that I think you need to know with respect to issues before the state and the Fed. So in terms of state policies, there's some things I thought we had wrapped up that are right back on the agenda because of some vetoes. So unemployment is one of the bigger issues in front of us. We will see over the course of the next 5 to 10 years, we will see various increases in the cost to employers for our unemployment system because of the extraordinary strain placed on our unemployment system over the course of this pandemic. So Michigan thankfully started out the pandemic as one of the strongest unemployment trust funds in America. So it was in a better position to withstand a pandemic, but it's still at a point where it will, during this calendar year, 2021, it will run out of money. It will need to borrow. That's not an if, it's only a matter of when, which month will it happen. It will run out of money, and it will, and that will mean that the trust fund will have to borrow, and that comes back as assessments on employers. One of the things that we had worked with both the administration and the legislature on is to the extent that benefits are going to be extended from where they were before, 20 weeks to 26 weeks. We were looking in partnership with a lot of other business organizations for the state to cover the cost of that extension. So in other words, if you want to give more weeks, that's great, but employers are in no position to pay for more weeks. So, and the trust fund is already depleted, essentially in negative, or headed toward negative or borrowing position. Therefore, the state should at least deposit enough money in it to cover the extension that they're looking to grant. And there was a breakdown in the negotiation between the governor and the legislature. They put $220 million in the budget. She line item the budget item. So what that means is that we don't have a deposit into the trust fund, but also it means that benefits don't get extended. So right now, anybody who files for unemployment January 1st and after can only qualify for up to 20 weeks. From the business community standpoint, if it was to get extended, it's okay not to extend it, but if it was to get extended, we wanted to make sure that they weren't going to send small business owners the bill for that extension. The other item that we wanted to point out that we'll continue to work on is the property tax deferral. So for those industries that have had more severe and longer lasting closures and restrictions, we think it makes sense to allow them to defer their property tax payments. There was a bill to accomplish that, at least late summer tax payments to allow them to be paid into 2021 without interest or penalty. But the budget line item for that got vetoed as well. Again, I don't think it was the policy as much as a dispute with the legislature that resulted in that. But to us, it doesn't really matter why it got vetoed. So it goes right back on the list of things that we will advocate for. We just think that makes sense. It's an important cash flow option for a small business that's been very severely restricted. And then work share. Work share continues, and largely it will work like it did before, once the federal $300 stipend, the pandemic unemployment insurance payments start coming in. So if you used WorkShare last year when the federal support was at 600, it's going to work the same this year, only the federal support will be $300 a week. So keep that in mind. If you have, rather than laying off full positions, you might want to think about laying off partial positions and using WorkShare. If you do that, the federal government actually pays the entire bill as opposed to it being charged to the. Now, on Paycheck Protection Program, of course, this is the biggest change and the biggest opportunity for those who have been most impacted by the pandemic, those that have actually experienced sales declines. There'll be another draw available for those businesses that are allowed to, or businesses that that had Paycheck Protection Program funding last year. There'll be a second option. And the second option, frankly, is the terms of it are better than before. So, but let's just get right into some of the details here. First is we already have the rules. So the Congress put in this act a requirement that the rules had to be out within 10 days of enactment, and so those came out late the night before, and they're pretty straight. I think they're relatively straightforward. I don't think banks are going to have a hard time understanding or interpreting them. So I think banks are going to start offering this very soon. I don't want to make any promises on their behalf, but I'll be surprised if we don't see the portal open from the SBA and banks doing deals yet in January. So. But we don't know for sure. What Congress said when the rules had to be out, they didn't say when the portal had to open. So that's one thing that we'll have to sit tight for. But I think it'll be pretty quick, seeing how straightforward the rules are. So this basically does two things. It says if you didn't get a Paycheck Protection Program loan in the first round, you can get your first one now, and that one works according to the rules, largely according to the same constraints and qualifications limitations as before. Most businesses are going to be in a position where they're working on their second draw. And so let's talk about that now. So the next slide, the first is they're targeting this one towards small business better than the first round. So if you're on your second draw, before you could qualify up to $10 million, but now it's $2 million. So the maximum you can get is $2 million. For most businesses, it's going to be the same multiplier, but we'll get to that in just a moment. And also in terms of the number of employees, it'll be up to 300 employees as opposed to before when it was 500 employees. And so that's it's targeted more. I think that these dollars that are appropriated in this act will go further than last time, because no more than $2 million, only up to 300 employees. And the other qualifier here is that you're going to have to be able to show that you had at least a 25% or more, so 25.00 or higher in loss in sales or revenues compared to in one quarter of 2020 compared to a quarter in 2019. The rules also say if you have an overall loss of 25% for the entire year, you don't have to do quarterly. You don't have to show it quarterly. You can just show, here are my 2020 sales, here are my 2019 sales, and I've got a 25% loss, therefore I qualify. I liked that provision because even though the law said in any quarter, naturally, if your entire year is down 25%, do the math. That means that somewhere in there you had to have at least a quarter that was down more than 25%. But there are a lot of small businesses that don't really have good quarterly financials, and if you don't meet it on an annual basis, in other words, if your sales for the year are not down 25%, you're going to have to go back and recreate quarterly, at least revenue numbers for 2019, 2020 to show your bank that or credit union that that you have at least one quarter in 2020 that was down 25%. So those are the main qualifiers, if you will. 501c6 organizations were also added. So that actually adds in a lot of nonprofits. As long as you're not mostly a lobbying organization, you can qualify as well. They'll have to flesh that out because there are organizations that do lobbying, but are they primarily a lobbying organization that are 501c6 organizations? I don't know how many of them there. Actually, that might be the chamber. Maybe you guys are a 501c6. But the loan size that you can get for most businesses, it will be the same as before. So before you took your 2019 total payroll up to $100,000, but it's all in payroll expenses. So you take your total payroll expenses up to $100,000 per employee, and you multiply and you get your monthly figure, your average monthly. So you look at 2019, or you can use 2020, whichever is better for you. The rules allow for you to pick which year you want to use. You get 2.5 times the monthly payroll. That's your Paycheck Protection Program size amount, unless you are in the restaurant or hospitality industry. SIC codes that start in, or NAICS codes, actually they call them now, that start with a 7.2, I believe, but your bank will check this. You get 3.5 times payroll. And so they're going further for the hospitality industry, which has been harder hit than most other industries. You know, this recovery people talked about, is it going to be a V? Is it going to be a U? Is it going to be a W? You know, what's our recovery going to look like? And it really looks more like a K, where you have some industries that have resumed growth, they're back to normal, they're going up. And then you have other industries that are barely hanging on by a thread, went down and are still going down. Restaurants, hospitality, industries, and entertainment are industries that are really on that, really in many cases are still falling.
Hey, Brian, we've got a question, a technical question. When you were talking about the head count, do you know if that's U.S. employees or if they're going to need, if they're over 300 and have international operations? Do you know how that might affect interpreting the 300 employee threshold?
Yeah, you know, I don't off the top of my head know. Before, I believe there are not too many of our members that have that type of a situation. So it's not something I've delved into. I do remember this coming up though before with just some friends that were trying to work it out or figure it out. And if it's under, I believe that it is just in the boundaries of the United States. I don't think that there's anything offshore that kind of gets inserted or considered in this. But yeah, that's something you'll have to, your banker will know based on rules they've been given for the portal applications that how that turns out. So now in terms of, so that's the, you know, the qualifiers and the loan amount that you can get, you know, that's all pretty straightforward, pretty similar to before. The forgiveness aspect of it is going to require that you spend at least 60% of the proceeds on payroll. Now, there aren't as many requirements in terms of how quickly you have to spend that money as before. We'll talk about that in a minute, but over the period of time that you spend this money, if you want to have it fully forgiven, 60% has to be spent on payroll. There are some new things you can spend the other 40% on, or if you want to spend more on non-payroll costs, you can. It just affects your forgiveness at the end, how much of it ends up being converted essentially into a grant. But that forgiveness is going to be prorated if you spend less than 60% on payroll. So it's just a scale. So however much less you spend is the difference in your how they'll prorate your forgiveness. But if your Paycheck Protection Program loan is less than $150,000, then forgiveness is basically automatic. You're going to have to essentially certify or say, I promise I did everything I was supposed to do, but it'll just be automatic. You're not going to even have to prove anything. And then it also, there were some businesses that were kind of surprised last time when the forgiveness, they applied for forgiveness and it came through, but 10,000 short because they got an economic injury disaster loan, an EDIL advance, and that gets deducted off your forgiveness. They changed that, including retroactively in this package, and that means that you'll be able to go back to your bank if you're in that situation. You got a Paycheck Protection Program loan, and you got an EDIL advance of 10,000, or it may have been less than 10,000, but up to $10,000. If that got deducted off your Paycheck Protection Program forgiveness, you'll be able to go back, have them reapply for full forgiveness, and this acts as you will be granted that. So that's a good sign. One other thing on that previous slide that I'd skipped over, deductibility. So you may or may not have been aware of this, but there was a battle raging among us advocacy organizations and the IRS with respect to whether you could deduct expenses paid with Paycheck Protection Program proceeds. IRS said no. IRS said since you're not getting, since the income, the forgiven loan is not taxable income, you may not deduct the expenses. And what we said was, while that's normal tax policy, that is not what the CARES Act says. But the CARES Act was not apparently clear enough to stop the IRS from implementing a rule or issuing a rule that said that you could not deduct Paycheck Protection Program proceed expenses. What we said was, that's not good enough. I mean, so you give the Paycheck Protection Program advances out, and then you take some back by issuing a tax bill next year. Thankfully, Congress fixed that. So it is crystal clear. The IRS has already rescinded the previous rule that said you couldn't deduct that. So when you do your taxes this year, you're going to be able to deduct all of your expenses from 2020, not just 2000, or not less the Paycheck Protection Program advances. All right, next slide now. So the nice thing about this generation of the Paycheck Protection Program is that it is more flexible in several different ways. In terms of how much you can borrow, it's 2.5 times or 3.5 times average monthly payroll. You can go through and see what was that in 2019 or what was that in 2020, whichever's better for you, you can use that. So that's a good change in this, because a lot of people, their 2020 payroll is going to be down, and they're trying to get back up to full. So the fact that you can go back and use 2019 for these purposes makes a lot of sense. This next bullet point will really mainly only apply to you if you're a lender, but they've also, good faith mistakes. They've got some provisions where you won't have to pay for those. But here's the here's the line in terms of like startups. You have to have been in business on February 15th, 2020 to qualify. And I know that there actually have been a lot of business startups during this time. If you look at the new business filings for the purposes of tax collections, you'll see that there have been a lot of new businesses that have started up since this pandemic. But for Paycheck Protection Program, this is not meant to get a new business up and running. It's meant to support those that are already running. And therefore, if you were not in business before February 15th, 2020, you don't qualify for round one or round two of the Paycheck Protection Program funding. Seasonal businesses, similar to before, when you figure your eligibility and your in terms of your average monthly payroll, you'll have special calculations to account for that. And then self-employed individuals are eligible. They'll also be eligible for the federal unemployment with the state unemployment like before. So any self-employed individual will want to compare that. So they'll look at their, if you're an LLC or an S Corp, you'll look at your net income, and it's 2.5 times that. Is that better or worse than, better or worse than the $300 a week plus the state unemployment? So in the next slide, if there have been increased bankruptcy filings, if you filed bankruptcy, you're not eligible for an SBA loan, and that carries through. These are SBA loans, SBA guaranteed loans. The the first draw is if you for whatever reason didn't get a first draw and you're going for a Paycheck Protection Program loan for the very first time, then you can still get the larger amount. It's still the same kind of parameters as the first round. So that's something just to keep in mind. There are not too many of those out there, but there are some. In Michigan, we had about I want to say 116 or so thousand Paycheck Protection Program loans done in the first round. So quite a few. And then there is if you have not spent all of your first round, you can't apply for the second round until you've spent the first round. So also keep that in mind. You don't have to have been forgiven for the first round to get the second round. But if you have some left over, then you can't get that second round until the first round is up. I think those are the main points I wanted to cover. If you are an LLC with multiple members and you kind of operate separately, sorry, but you have to put it all in as one application. You can't have individual members applying separately for the Paycheck Protection Program. Was that remind me, is that the last slide, or do we have one more on there?
That's the last slide.
That's it. Okay. All right. So I'd be happy to take some questions with the caveat that I'll let you know if I know the answer or less than 100% sure on it. In a lot of the cases, I kind of know, or I have a pretty good idea on the gray area, but not always. So I'm happy to take any questions.
Brian, we do have one, again, maybe a technical question. Questioning about if who is eligible for PPP this round. Does it include franchise owners and those with 1099K income or non-traditional payroll, or 1099 miscellaneous, as some self-employed people might have?
I think generally the answer is going to be yes, that they will basically they'll take a look in many of those cases, like it's going to be it'll be schedules on a personal tax return. There are a lot of those types of operations that just the nature of them and getting your income down lower, it's not really payroll, right? So you can't look at it and say, here's my payroll cost, because it's a net income number on the personal tax return. So what they'll do is they'll take the annual number of taxable income, not revenue, taxable income, divided by 12, multiply that by 2.5, and that's your total amount. There are many businesses in that situation last time that said, that makes sense. That'd be $800, or that'd be, it's just the nature of how they operate and how it hits the tax return, that the unemployment option made more sense. But you only qualify for unemployment if you're unavailable for work, or if you're available for work and unemployed. So if you're operating the business right now, you don't qualify for unemployment. So if it's the type of business where there's really nothing you can do right now, just I'll give you an example. We have a member, and what they do is linens for events. And I mean, they're literally just shut down. Like there's no other use for their linens. And so they're literally shut down. That would be a case if it happened to be a sole proprietor, or maybe the unemployment option would be better than Paycheck Protection Program. So there's nothing inherent in the rules that would keep you from applying. But my experience is that a lot of those have looked at the Paycheck Protection Program construction and said, since they use in those cases, they use the annual net income, that it doesn't work out to be enough to make it kind of worth the time, effort, and expense.
Thank you for that. We are heading up to the end of our time together, but I want to ask this final question. We want to talk a little bit about the employee retention tax credits. There's also been some changes there that I think are quite favorable for some of our members.
Yeah, and we actually, SBAM has a webinar later on today that I will be watching from an accounting firm that we work with. And this is one of the topics covered. So I apologize, I hadn't. I haven't gotten, I've been so focused on Paycheck Protection Program, I haven't gotten into the employee retention credit. I know last year in the CARES Act, it was quite good, and there were many types of businesses that was a better option for them than the Paycheck Protection Program, as long as they could handle the cash flow in the meantime. And so that's, I think that this next, if the Paycheck Protection Program is any indication, I think that that it will be better than before. They tried, in other words, they've tried to improve upon it, but I'm not in a position where I could tell you many details about it right now. Maybe Jane, if you have that.
Yeah, it's something we're watching carefully, and we'll have one of our questions of the day ready, I think next week on this one. But it's our understanding that whereas it was capped at $5,000 an employee last year, it's going to be $7,000 per employee for up to 2 quarters. So it can be up to $14,000 per employee. So one of our recommendations is talk to your payroll provider. They're going to become quickly the experts on this. And it's certainly something the Chamber as an employer we're looking at, and something we suggest to our members to study. And so, Brian, I'm sure your webinar today would be also a good resource for folks to learn more about this additional change. Well, it is 10:44, and that brings us to the end of today's program. Brian, Calley, thank you so much for joining us today. This was perfect timing for some very important programs. We're glad you were with us. So that wraps up today's program. Thank you to all of our advocacy and action sponsors. Thank you, Joe Hune and Blue Cross Blue Shield, for sponsoring today's program. Thanks for coming, and have a great weekend.